Hello guys, welcome back to the channel. If you're very serious about trading, this is the right channel for you. Just to let you know, there is some good opportunity on the market right now that you can use with different strategy. Let's dive in and check them out. Yeah, let's start with the SPY. Where is the SPY heading so far? So basically, to see where the market is heading, you can use the SPY or SPX because majority of the big company are all inside this ETF or this index. So let's go with me. I like to use SPY. So we're gonna go see the SPY. So from my side, I already did some analysis on the SPY, where it's heading and everything. How I did it is simple. It's really simple. You just go into past. You see on every swing up and down how much days it took, what is the percentage increase each time, and then I just took the most conservative number. So basically you can see here it was up in 2009, it was up to 101% before it go down for 23%, and then it go up back to 94% before it go back to minus 16%. So I did that the whole years. So then we are here today. So basically the minimum target will be around $723. So the market will still continue to go up. It's just like as any stocks or situation, it will be like a lot of ups and down, ups and down. It never goes straight forward. It's really really rare. If it go, then it's even better, but it's really really rare that it goes straight forward. Usually it's gonna go up, and then there is retracement of like maybe 8%, 5% before it go back up stronger. So SPY will keep going up, but of course like with waves, not straight line. So usually now this is into monthly. So if you go back to an example weekly, you can see it start a little bit going down, but I see a strong trend. Like there's no much retracement there. And to check the retracement, how strong it is, you can use the Fibonacci level. I'm gonna do like another video more in details for everything, like for the moving average, for the Fibonacci level, to supply demand zone, how you calculate risk reward. So all those things I will do it in a video separately. I'm just gonna do like a general information about what is happening right now, and then in the next video I will do something more specifically, so you guys can understand more how I see those things. So yes, basically here he's gonna dive. He's diving in up. So yeah, he's on a very strong uptrend. So he may retrace a little bit before going back up, but he's gonna get there. This we don't know how long. It can take like 5 months, 6 months. It can take 3 months. Nobody knows. So yeah, now here is in a strong uptrend. So you can see here on the daily. This is the daily. So he's retracing. You see on the daily, as I saw. So he's retracing. So he may go a little bit more down here, and then after it's gonna be a higher high that he will reach. So far it's good. He's gonna go a little bit down before reaching a higher high. So when you see that, how you can capitalize on the market? So if you know that the whole market is up, like majority of the stock is up, so you can choose great company and go up with them. So basically you see that, then you can go on any great company. So Amazon, Google, Apple, British Hathaway. You can even go with Nvidia, Palantir. You can use those company. Just go a swing up in Microsoft as well. So an example, let's go quickly with Apple. So here, this is a great company. So here we go. So Apple is there. Again, I'm gonna go back into past. Just to give you an idea how I see it. So you guys can capitalize on it also. So here we go. You see Apple. Basically, this is the monthly chart. So on to March 2nd, 2020, he was at $52. You see the swing up here, and then he retraced on this strong trend line. You can see it here, and then he go back up, retrace here, And you can see the retracement. You can also use Fibonacci. I will explain it again more in other videos. So this is 0.5. And then if you go back and use it again for the next retracement, 0.38. And then he retrace again here, 0.88. So you can see the trend is up. Monthly, he's retracing before he going back up. But each time, as you can see, he's doing a higher high and a higher low. How I can see that? Look here. So an example. Yeah. So you see here, this is the first swing high. Okay. First swing from the bottom to the high. So here, this is the low. This is the high. Low, high. Low, high. You see here again, same thing, same pattern. It repeats itself. It repeats itself. So you go back here, low, and then guess what? High. It will go above this one. It will go above this one. So here we go. It will go above this one. Of how much, there's no specific number you can be exactly about, but you can go into past and then you can figure out the number. Me, I put it minimum target 273 that he will reach before he's going back down. So basically he's gonna, yeah, you see here. So how you can capitalize? So basically me, I took some opportunity here. So I took it around here because at this moment, this month, he was so volatile that it was hard to figure out. But when he retraced a little bit here, I took it here. So 2.8, and now he's at 256 now. So I'm letting keep going up. So I'm waiting until when he pass 262 and he go to 271. Now I'm gonna think about selling my call option. So simple as that, yeah. So then, like an example, so for this swing, you can literally. So if you go calculate, I was calculating for other swing that I did. So an example from the bottom to the top. So here we go. An example, I took it from, if you take it from here to here, you have 70, like around, excuse me, from here to here, you have around $60 swing. So each dollar is $100. So one contract will get you 6,000. And if you take 10 contracts, you can make 60K. So basically, it's very important before you take any contract to do a risk reward ratio. So in example, if one contract cost me, let's do it right now here. So if one contract costs me $3,000, me personally, I will only risk 40% of this $3,000. 40% of this will be 1,200. So 1,200 maximum risk. Okay, this is for one contract. So max risk 1,200. The maximum profit that you're gonna make will be as we spoke. There's $60 swing, so it's gonna be $6,000 to profit, and it can go higher, but this is what we think is gonna go there before we're selling. So $6,000. So then you're gonna go there and you say, okay, I'm risking $1,200 to make $6,000. So that's a really, but it's 1 to 5. So basically, you're risking an example 1 to make 5 times your money. So an example 1 to make 5. So 1 to make 5. That's a really good deal. So you're risking 1 to make 5, and usually with experience and time and all those things, you will even be risking less than 40% because you know more where to exit if the market turn against you. So then it's gonna be less than 40%, but for now let's put it 40%. That's the maximum risk we're gonna do. So quick one, you see, so basically you can capitalize on that. You can make like a good profit. If you took an example 10 trade, you make 60,000 on this on this stock. For another one quickly, if you go to there is a good stock, yeah, you know, no, let's go with Berkshire Hathaway. Okay, this is a good company as well, really good company. Majority of the time is up, so you can literally just go check any company that majority of the time they are up. Like I gave you quick one from my top of my head. There is Amazon, Google, Microsoft, Berkshire Hathaway, Nvidia, Palantir, majority of the time is like 80% during a year they're upward. So those companies will secure like almost guarantee a profit. Berkshire Hathaway, so you have it here. You see here. So same pattern. This is what you do. You go monthly, after you go weekly, after you go daily, after you go 4 hour, 1 hour, and the best thing to do is monthly. You check where the trend is heading. To weekly give you a little bit more precision again where the trade is heading, and the daily will get you more where to take the trade at the moment. With the 4 hour into 1 hour, they will get you pretty much where to take the trade, so you maximize. So as you can see, Berkshire Hathaway from Warren Buffett, again it's pretty much the same. So up, down, up, down, up, down, up, down, up, down, up. This is a really, 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 really strong uptrend. Really, really. Up, down, up, down, up, down. Here we go again. I am in. So I'm targeting around 560 that he will go before going back down. So now I'm in. So basically, again, let's do another simulation. So let's go. So an example, one contract swing available right now. So now, so far of today, 510 to 560. So there's $50 swing. $50 swing, not bad. And basically one contract equal, an example, 5K profit. An example, how much a contract will cost you. This will be around 4,000 for this one, for 350, 340 days expiry. So 4,000, and you're risking 40% again. So it's 1,600. So I'm risking 1,600 to make 5,000 per contract. So risking 1.6 to make 5,000. Again, this is a really, really good. Me 4 times your money, around four times your money, or 3.5 times. So this is a good deal as well. It's really the company is really bullish. So you can take it as an example. Me, I took it. So that's what I'm saying. So the monthly will get you where the market will head. And if you go smaller, you're gonna have a better precision. As you can see, here's a slow consolidation. And if you go to daily, you see here, excuse me, yeah, so here daily, yeah, so he's heading up. So when he does this breakout, he's gonna go a higher high here, and after he do the higher high again, slowly back down, higher high, slowly back down. You can make a lot of money by the swings. So an example, for every small swing that he does, you can take profit. An example, he come here, take profit, going back down, here, back down, back down. In this case, because this stock is really, really bullish, I don't suggest to swing on it. Just to take one leap, leave it there. He's gonna go up, and that's it. Because it's really, really strong bullish, really, really. So you leave it there. I'm in. I have 4 contracts on it. I started around here my contract, so 480. So it's like 480 or 485, something around here. And now he's 495. So it went to 57. I didn't sell, so I leave it. And then he's gonna go back to another swing high. You leave it, and that's it. So guys, that's finished for me. So that's finished for me here. It was a small introduction about like how you see the market.